Good morning, all. Today we will talk about some mutual fund categories. So let's talk about what is large cap. So large cap, basically, if you see the categorization by SEBI, which is done recently, the top 100 companies in Sensex and Nifty, or from capitalization wise, top 100 companies is called large cap. As simple as that. So companies like Reliance, HDFC, all these, Infosys, all these companies, if they are coming under 1 to 100, that is called large cap. So large cap mutual fund, if you talk about, so the fund manager used to pick some stocks from those 100 top 100 companies and manage in a portfolio. Say for example, one fund manager is having 60 companies. So 60 out of that 100 companies made of that, made for you, and then again the fund manager is going to manage which company to add more, which company to delete, reduce the positions. So based on that, you will be getting returns on the portfolio. So on an average, large cap returns, if you see, it will be varying from 8 to 12% kind of returns, or sometimes also you can see 14-15% return on an average period of 3 to 5 years. So we talk about mid cap. As a categorization, again, from 101 to 250 companies are all mid cap companies. So whenever any fund manager is saying that I am going to manage mid cap funds, or any advisor is saying that sir, you can take mid cap as a category and invest in mid cap companies, that means from 101 to 250 companies is going to park in your portfolio. So out of these stocks, if he is making a portfolio of 30 companies or 50 companies or 100 companies, you can understand what kind of returns you are going to make. So mid cap returns, if you see on an average of 3 to 5 years, maybe varying from 12-13% to 20-22%, 23%, 25% kind of returns. So if you talk about small cap, again 251 companies say onwards, which is not large cap, which is not mid cap. The rest of the category is small cap. So if you see, say for example, you have 500 companies listed on the stock exchange and 5,000 companies, sorry. So out of 5,000 companies, top 100 gone for large cap, then 101 to 250 is mid cap, and 251 say like all the stocks are coming under small cap. So in our sense, in our view, you have a larger number of stocks to pick in small cap. Large cap, very limited options. Mid cap, again limited options. But in small cap, there are a lot of options to pick and choose, right? So people, those who are looking for aggressive returns, maybe chasing for more than 20%, 25%, they should prefer going ahead with small cap. Obviously, when you are going to pick, you should remember that you should consult your advisor or wealth manager when to get into it and how to get into it. Whether the period, the time when you are giving money, if the valuation is very high, so then you should go in a staggered manner, or maybe SIP is the best option for that small cap category. So again, it will be depending upon the age of the person. So if you are at a young age, you can choose small or mid cap companies for an SIP for a longer period of time, say 15, 20 years, 25 years. But then there also you need an advisor, because you need to book profit sometime and you need to park in different strategies, right? So small cap is a category where you can maximize your returns, which can be into satellite portfolio kind of. So this is broader range of categorization. If you talk about multi cap as a category, so in multi cap there are simple logic as per the SEBI. It is 25, 25, 25. So fund manager is having option of only 25% to give the overweightage or underweightage depending upon the market situation. Say the fund manager is more comfort on large cap. So after giving that 25% allocation, he has that extra 25. He can increase 5% there or 10% there in large cap and rest in mid cap and small cap. Similarly, if the fund manager is looking opportunities in mid cap, then 25% in large cap, 25% in small cap. In mid cap, he can increase by 5-10% or 20%. So like that, if he is, let's suppose, getting opportunities in small cap, similarly large cap and mid cap will consist of 25, 25, 50. The rest 50% he can get into the small cap. So that is more or less multi cap fund. Another category which SEBI again classified, that is called Flexi cap. So Flexi cap is like the option is given to the fund manager. According to the fund manager's choice or his view or his conviction, if he thinks that mid cap is going to give you better return, he may increase marginally higher allocation to mid cap. Or if you think, let's say, sometimes thinks that large cap is going to give you good returns, so he can go up to 60, 70, 80% also in that particular mutual fund. Similarly, whenever times comes and he thinks that we can increase the small cap a bit, so he can increase small cap as per his choice. So the name itself saying that Flexi cap. So there is a flexibility to choose or to reduce the allocation or maximize the allocation in the category. So these are the broader classifications. But if you talk about sectorial funds, again that is called thematic fund. So it is again people those who are looking for any particular sector. Say for example, as an investor, if I am bullish on IT sector, so I can choose IT index fund or IT sector funds, which is consisting of all IT companies, small, mid and large companies in IT sector only. If I am bullish on financial sector, so then I will be having banking, non-banking, microfinance companies portfolio where fund manager is going to manage over a period of time, and you can see the good part of it is like if it is running, if it is giving good returns, you may get slightly better return than other categories because it is a concentrated portfolio. Similarly, some focused product are also there. So focused funds means it is focused on 30-40 stocks or 20-25 stocks so that you can get better returns. I think I have covered almost all the categorization of the funds in equity. Thank you so much. Thanks for watching this video. Please like, share and subscribe this channel. Thank you.